The other reason why trend lines are useful with fibs is the added context. The term I use for this is the effective time range of the fib. I define effective time range as the period of time a fib is most reliable based on the trend line drawn within the fib. The period of time a fib is most effective is determined by how far ahead in time the trend line extends until it lines up with the second swing low or swing high that completes the fib. In this example, the trend line extends to around mid-August. After mid-August, the fib begins to lose reliability since it is at the end of its effective time range. For extra clarity, let's go over another example of the step-by-step process of drawing and validating a fib. This time, it will be a fib from an uptrend. Pay particular attention to the trend line and effective time range. Step 1. Find a clearly defined swing low and swing high. In this example, we could use the downtrend that begins at the $32 range, but we already began with an example using a downtrend, and this will provide a good case where, as long as the swing points are clear, a fib can still be drawn. Step 2. Draw your fib by clicking the swing low at 22.73, then drag to line up with the other swing point. Here it is the swing high at 29.46. Notice how 29.46 is a valid swing point because it is a reversal point. Even though it is not as established as other swing points like at 26.09 or 26.89, it is still an established swing high, just in an earlier stage of development. There is a clear change of direction in the form of a downswing within the larger uptrend that began with the swing point from 22.73. Step 3. Confirmation and validation with a confirmation triangle. The question is, do fib levels line up with areas where price reversed, stalled, or broke out with large price movements and or high volume? Here the answer is yes. The characteristics are seen. Then draw a diagonal or trend line, whichever name you prefer. Start from the first swing point you began drawing your fib with. In this case, the swing low at 22.73. Then line up the trend line to contact at least one swing point in between the start and end points of the fib. Here we have 3. Lastly, line up the end of the trend line with the second swing point that ends the fib range. In this case, it is the reversal high of the uptrend at 29.46. Now you have a valid fib that has been confirmed with multiple methods of validation. Unlike the previous example where the chart was reaching new highs, this chart has more price action to reference from the past. To confirm your fib levels for extra validity with these price levels before the fib started, simply extend the lines of your fib to the left. Check to see if your charting program has the option to extend fib levels to the left. If this option is not available, you can manually draw the lines to the left. In addition to the confirmation triangle, we can also see fib levels line up with past resistance and support areas before the confirmation triangle. This process is not necessary but gives an extra layer of reliability to the fib. Lastly, we see the end result of reliable identification of key price levels. almost 1 whole year in advance. The reversals at the 0.236 and 0.786 fib levels in 2011 are especially noticeable, with large price reversals occurring at these levels. In the case of this example, the fib would lose reliability as price moved outside the price range of the fib. Here it would be if price moved above 29.46 or below 22.79. The other scenario this fib would lose reliability would be when the effective time range was passed, and no new confirmation triangle could be drawn to reach new price levels within the price range of the fib. That is to say, the confirmation triangle could not be extended by contacting a newer reversal point between the swing low and swing high. These adjustments demonstrate a new confirmation triangle can be drawn within the fib price range from 29.46 to 22.79. This triangle and its trend line extended the effective time range further for a few more months, since the trend line can contact a new swing point in late 2011 between 29.46 and 22.79. Further into the future, the chart demonstrates how reliability begins to decrease as price moves out of the fib price range. In this case, price moves above 29.46 in February 2012. The fib levels still approximately identify where price reverses, even after price has moved out of the fib price range and the effective time range of the trend line. However, levels are not as accurate as before when they were in the effective time range, and price had not moved outside the fib price range. Reversals do occur at these levels, but price often drifts around and doesn't reverse off the levels as clearly as before February 2012. Before misunderstanding fibs to be a perfect tool to predict future price movement, here is a fib with a valid confirmation triangle. Future price won't always hit all the price levels with pinpoint accuracy. There is a validation of the fib levels with past resistance and support, and here are some of the possible extensions of the effective time range as shown by the multiple trend lines. Perfect contact with fib levels is shown by yellow circles, and blue squares show near contact or near misses. Keep in mind, fib levels are just approximations and not always guaranteed reversal points. Rather, they are more accurately described as marking the approximate areas or zones where reversals could occur. Here is another instance where multiple possible trend lines can be drawn within the fib price range to extend the effective time range. Pay special attention to the 0 fib level at 87.06. In late 2013, when price comes close but doesn't touch the exact fib level where price reversed off a previous high earlier in the year. Situations like this often occur when the previous swing point had high volume, which can slightly lower the area of resistance below the exact fib level. A more accurate line to mark resistance near the fib level is 86.50 because the volume at the previous swing point is higher for more resistance force and lines up closer with most of the closing prices of the prior swing point. Later contact occurs and breaks above the exact 0 fib level at 87.06 because the effect of the lowered resistance force dissipates over a long period of time, almost a year later. This Dow chart also demonstrates the phenomenon, except it is in the reverse. Supporting force is slightly above a fib level that marks a possible supporting level. I use this example of the Dow because it shows famous reversals that many stock markets around the world followed in August 2015 and early 2016. Unlike previous charts, I just mark the longest and most recent trend line that is relevant for confirming the effective time range of the fib. By now you should be able to clearly see the possible swing points. You could draw the trend line through to extend the effective time range. There were many during 2016. Just like the previous PepsiCo chart example, a major price reversal occurs slightly before the exact level, in this case the zero level at 15,370. The very large price movement and, more importantly, high volume are enough to create a situation where supporting force is slightly above the exact fib level. Actually, during the reversal in early 2016, many were watching the 0.236 fib level at around 16,000. The best and most realistic way to have used the fib here would have been to think of the larger zone between the 0 and 0.236 fib levels as a support zone. An exact level of entry in the 15,300 area would be too idealistic. Although the 0 fib level is the absolute low, the 0.236 fib level is the site of more price action, having acted as support and had major price congestion, while the 0 level was only the tip of an intraday low. Also of interest is the price congestion beginning towards the end of 2016. The first time price went above the 1 level, the fib began to lose reliability. Incidentally, at the same time, while price began to congest, and the fundamental forces of the stock market were indecisive, ahead of the 2016 US presidential election, the 1 level thus still did resist support and congest price, but it was losing reliability as a reversal point right at the tail end of the effective time range. Eventually, price absolutely rocketed up after the election was over and uncertainty had subsided. This left the fib level irrelevant, just as the effective time range and price range of the fib were passed.